Okay, welcome to the Swing Trading with Cycles channel. This is where we time the markets without predicting the markets. We're going to talk about the S&P 500 primarily here, really looking at the broader markets. It is October 17th, Monday night, so we have one full day of trading for the week. And that it means it's super early. Still have 4 complete days to go, so the weekly candle could change a lot. But so far, the price action suggests we may have a short-term low in place at the very least. And so let's talk about why I think that's the case. And looking at the previous video, I think will be very useful to kind of get a sense. If you haven't taken a look at that, there's a link in the description to see that video. It was really just after Friday close. So we'll start with the we'll start with the daily cycle, the daily chart. And I'll assume that you've already looked at the Cycles 101 content. You can see it. There's a link in the description. It's also, the pinned video on my page, on the channel, I should say. So we had a very violent reversal on CPI day on Thursday, October 13th. So we gapped down because CPI comes out at 8:30, which means, and this is the SPX cash, which means the indices don't have a chance to react in real time. They react when they open. In this case, it was bearish, so it had a gap down open. We know that it opened here because that's how candles work. This is a green candle, which means it opens here. We know it even dipped after it opened, right? So so that's important, right? It was a gap down opening, but we then actually fell even lower. So people were thinking we're going to fall off a cliff, right? We make a low at 34.91.58. And I also talk about this in my weekly report, which usually comes out either Saturday or Sunday. I will definitely put a link in the description so it's convenient for you. But I talked about that really important level, that 34, like that new low. And then the next, so we got that gap down, but then we had a rocket ship higher. This is what is called a bullish outside candle. So let's first focus on the outside part. What is an outside candle? An outside candle is a candle that makes a new high and a new low relative to the previous candle. In this case, this is the previous candle. So very clear range. I'm going to put a finer point on this. That's your range, right? And so that was our range for that day. The next day, we gapped down below it. So we made a new low, like a massive new low. And then we rocketed higher and made a new high. This is a pattern you want to look for when we make a low and then the candle flips green. That is a signal that we may be getting an outside candle. Doesn't mean we always get an outside candle when that happens, but that's your potential setup. Very, very profitable pattern. The same as works in the other direction. So this is your Friday candle where you had a massive reversal. This is the setup for a bearish outside candle, right? It's the same principle in reverse. We make a new high. So in this case, we'll go to this candle's range, right? So when we're thinking about this candle, so this candle opens here, because we know that because that's how a right candle works. And then we know it went higher. So at one point, this was a green candle. We were all the way up here, looking pretty good. We got follow through. And then we just failed. We went red. So same idea. You make a new low, and then you go green and start going in the opposite direction. In this case, you make a new high, then you go red and start going lower. That's your setup that this thing wants to make a new low down here at that 34.91. That was something that you had to be prepared for on Friday, right? We obviously did not make that new low. We closed. We kind of ran out of time almost. And so the setup was, we're probably going to open somewhere around here, right? All things being equal. And that makes it easy for us to make a new low. These two become a compound bar of this. That's not what happened. Look where we opened. We opened here. So like the middle of the range on this red candle, which is really interesting, right? That means we had some bullishness sort of overnight over the weekend. And instead of opening down here, we opened here. But what do you also notice? This is an inside candle, which means it didn't make a new high. This is our new level that we need to be watching. And I hope this is starting to make sense to you all, right? That becomes our new level, like this candle here. Got to stay above this low, and so far we have. But now we got to get through this high, and we didn't do that today. That's why we watch for Tuesday. You want to see a break above 37.12 in the S&P cash. That tells you we're now making higher highs on the daily chart. Another way to think about that is we have an emerging uptrend on the daily chart. Now we need to get follow through for that uptrend to turn into an uptrend on the weekly and the monthly, but that's your first sign. I will say broadly, although it does look like we have a daily cycle low here at day 27. So this would be day 2 that we just had today. And if we see more follow through tomorrow, Tuesday, it'll be day 3. We are still not out of the woods, right? I keep talking about this. In a downtrend, price makes lower highs. That's incredibly important. That means you're going to get bounces, you're going to get little rallies, but they end as lower highs. In fact, price needs to make lower highs. I hope they're like, that's a lower high. This little rally here, that's a tiny little lower high. That's a little lower high, this little rally. This is a little lower high. So is this another little lower high? And so by definition, look at this chart structurally, right? We really, like, if this is another lower high, we wouldn't go above 38.06, right? Or if we do go above 38.06, we wouldn't spend too much time there. We would get a rejection. We would have a false breakout. So that's going to be really, really interesting to watch because we're here below 3,700. So we could have a more than 100-point rally and it could still be bearish. It could still end as a lower high, essentially. That's really important to understand. And it makes these levels, they're not random. It's not mysterious. The way people are like, oh my God, we're being whipsawed. Not really, because this didn't make a new low. And I mentioned this on Twitter. That's important. These levels are important. It's math. And when I say levels, I really mean zones, but you get the idea. If we had gotten a reversal on Friday and we made a new low, that would be different. We did not make a new low. We stopped here, and more importantly, today we didn't get bearish follow through. We're just getting consolidation, and you can argue bullish consolidation because this is at the higher end of the range. So if we take a little peek at the futures, how are we looking right now? Nice. So the futures have made a higher high because the futures obviously opened a little while ago. So that's obviously a lot of trading to happen between now and even tomorrow's open, let alone the close. But that's a good sign so far. And again, I think this is probably short-lived. Now, what does this mean for the weekly? Here's the really important thing, and I mentioned this in my weekly report, as I alluded to. Last week was a weekly last week's upper wick created the conditions for a swing for an inside weekly candle, and that's what we have so far, right? We expected the weekly candle to open inside. Now, that said, we expected it to open inside, but down here, because that's where we closed. We closed here. But again, same idea with that daily chart. We just opened at the higher end of the range, which is obviously bullish. Also notice we're just above the 200-week moving average. That's this yellow line here. I'll zoom in so that we can see that, hopefully. And so this level here is that 37.12. I'll actually change the coordinates. Those lines are always off. Like it doesn't hit exactly at the high for whatever reason. So that 37.12 level is not a coincidence. That's the high from last week, from our CPI day, right? Like we need to, that's this, that's the high from Friday, right? Like we need to get out above this high at 37.12. That will give us a new high on the weekly chart. And that will make this a weekly swing low. The same way this was a weekly swing low once we went above that high. And that was a weekly swing low once we went above that one, right? Like that's how these things work. That was a weekly swing low once we went above that one. So that's what we're watching for, right? Like now you already have enough bullish signals that a trade could be put on. But if one were looking for further confirmation, a move above 37.12 would really tell you, okay, now we're making new highs on the weekly chart. And, you also want to see a back test. Like, are we able to hold that level, like when we see weakness? So what this could mean is we had a weekly cycle that was 16 weeks. Then we had a 9-week rally. And then we could have just gotten our weekly cycle low last week at week 17. Now, here's why that's not necessarily bullish. Because if we're starting a new cycle right now, and we have reason to believe, as we keep saying, we're still declining we're still in the declining phase of the 3-year cycle. Let's say this would be theoretically week 1 of a new weekly cycle. Let's say this one goes to 20 weeks, right? We've been getting really short ones, but like, look at that. That's not a coincidence. Like this line has been drawn here for a long time, right? So just to be clear, what this means is this is just estimating if this were week 1 and this cycle if we are starting a new weekly cycle, and if that weekly cycle were going to be 20 weeks long, the low would happen somewhere around the end of February, which is the timing band that we're expecting the 3-year cycle low. And that makes sense because every long-term cycle low coincides with a shorter-term cycle low, which is to say the 3-year cycle will also be a weekly cycle low. Excuse me, the 3-year cycle low will also be a weekly cycle low, and it'll also be a daily cycle low for that matter. So understanding how these cycles nest within each other is critically important. So this is really interesting because what this is actually telling us is that if last week was not our ICL, then we're either going to have a really short weekly cycle going into the low, or the low for the 3-year cycle is going to extend to a little bit to later in 2023. This is definitely lending more credence to the idea that this is a new weekly cycle. Now, again, the expectation would be that this weekly cycle ends in a lower high, the same way all the other ones did. So like you went like this, then that, then that, then that, like that, then that, like that, then that, that. And then you're thinking maybe something like that, right? And that would be obviously pretty generous. And obviously I went past the the 3-year cycle, but you get the point. We could get a little rally here. I mean, if you think about the weekly chart, we'd really need to get above 4,100, like right here, structurally, to say, okay, now we're really starting to break that pattern of lower highs, right? Like the other level that would kind of become a magnet is like right there, that around that 3810, which is not a coincidence. That's that same level from the daily chart. Again, that's why the multiple time frame analysis is so incredibly critical. And then finally, if we look at the monthly chart, this is SPX. We'll quickly look at QQQ and IWM after this. We are green now. This is month 31 of what we expect is a 36-month cycle, thereabouts, 3 years, 36 months, easy math. We've been declining since month 22, that's January. And notice we're sitting right on, this is the 50-month moving average. So this is a 50-period moving average. This is a monthly chart, so it's the 50-month moving average. So a really long-term moving average, over 5 years. And we dipped below it, actually, right? Like earlier this month, last week, at that 34.91 level. And now we've sprung back up. All that to say, we could still be setting up for a lower high. And that would be the expectation until we see, and that's the thing about where we're at. We really need to get above 41.26 to get ourselves a monthly swing low, which is obviously, that's like 450 points from here. So it's like you'd have to see a lot of upside to feel confident that, the upside might be more sustained, which is almost the definition of a bad risk reward ratio, right? Like you want something where confirmation comes sooner so you can get in sooner. But we're going to be watching for those lower time frame signals. Again, first step will be confirming we're in a new weekly cycle, because in that case, we could easily get a rally for like 5, 6, maybe even 8 weeks. Remember, the previous weekly cycle rallied for 9 weeks. So there's no reason why we couldn't get a rally that's at least a month long. So it might give enough time for a trade, depending on your time frame, depending on how nimble you are. But I do still expect a lower low by the time we hit that 3-year cycle low, somewhere probably in the low 3,000 area. So we'll look at QQQ. It's all the same situation, slightly different levels. So Q's, same idea. It's potentially day 2. Potentially Monday was day 2. And, Tuesday will be day 3 of a new daily cycle. This is just consolidation for the Qs. Need to get out above 271.81 and really need to stay above 260 thereabouts. So pretty big range. And right now we're at the higher end of it. Interestingly, we did not close above the 10-period moving average, whereas SPX did. So that's important to note. And same setup here. Potential swing low. we need to get above 271.81 in this case. That would give us our weekly swing low for the Qs. And on the monthly, just barely turning green again. So this is clearly lagging the S&P 500. And again, still kind of like hugging the 50-month moving average. Not exactly an amazing look. And then we'll flip over to IWM. So IWM, much greener than the Qs. But look at this. IWM is comfortably below the 50-month moving average. And in fact, important, blinking red light, we closed below the 50-month moving average basically 4 of the last, I should say 2 of the last 4 months, right? So we closed in June, managed to close above it in July, and managed to stay above it in August, even though this is an incredibly bearish candle. But then we just got downside follow through. So this, all of that to say, this has all the look of of building out a lower high here. And finally, on the daily, again, same idea. Day 27, possibly your DCL, and also making the week possibly your a weekly cycle low here. Once we get a swing low on the weekly, and that for IWM, that's a move basically above 174, gives you a weekly swing low. So that's an important signal. That'll be an important level zone, I'll say, that we're going to want to watch for. So that's the lay of the land for, again, the broader indices, spot S&P 500, QQQ, and IWM. So to recap, we may be putting in a daily cycle low here. That daily cycle low may actually also be a weekly cycle low, but that's not necessarily a reason to get super excited, because we know weekly cycles can be very left translated. We could end up with a rally that's only, a few weeks long before we resume a move down to lower lows, which is my base case general kind of expectation. So that is a lay of the land. Definitely you'll want to take a look at the Dixie video I put out as well, because the Dixie looks like it might be moving into a weekly cycle low, which is to say, it looks like it just printed an ICH, an intermediate cycle high or a weekly cycle high. So that would make sense, right? When the dollar prints its weekly cycle high and starts its decline into a weekly cycle low, risk assets start to move out into a new weekly cycle. So basically ICLs and ICHs can coincide for assets that are inversely correlated. So that also lends credence this idea that as we continue to see dollar weakness, that suggests maybe we are seeing a more, and I won't even say the word sustain, because I want to be super clear. I'm just saying we may see a rally that lasts a little bit more than a day or two, which is what we've been seeing recently. Not a reason to get super bullish. And you want to be careful of that lower high.